Hello, everyone, and thanks for joining us today. And on today's session, we're going to bring in Cameron Finbow for our expert mortgage minute. And Cam's going to take us through a few questions that he's seeing on the mortgage and lending side of things, and very topical given the recent rate increase in our country. So Cam's going to be able to answer a few of the questions that we've been fielding from clients, and also give a state of where the market is going and what that means for any potential buyers or sellers. So very excited to have Cam with us here today. So I'm Erik Wachman, and I'm advisor at Assante Wealth Management, and very excited to be presenting today's expert, Cameron Finbow. Cam, please take it away.
Yeah, no, my name's Cameron. I'm a mortgage agent with Dominion Lending Centers. I achieved my Bachelor of Arts in Law from Carleton University, but I've been in the industry for many years now. So seen everything from the bank side to the brokerage side, and then as well as credit adjudication with TD Bank. So seeing a lot of documents come through, a lot of different situations. So now putting my practice into actual work for clients right now. So very excited to be here.
Great, and thanks for taking the time with us today. Very topical time to be talking about this. So excited to be sharing this with clients and everybody in our networks. So quick recap on what we're going to discuss today. We're going to look at what is a refi, so refinancing. What is it and how does it work? We get this question often, especially when we see rate movements. So very topical, something to look at. We're going to have a look at the age-old question of should you go fixed or should you go variable? When should you flip? Well, when should you review your mortgage? What are some of the prompts that you might want to consider if you are getting close to a renewal, or if you renewed a while back and you're looking to review what your current terms are? So we'll look at some of those prompts in action, items that might trigger a conversation with a lender. And we'll also look at what are the costs and considerations in breaking your mortgage. I mean, Cam can discuss a little bit later. Often when we get into our first mortgage, we're looking at rate and rate only, but there's much more to a mortgage than just the rate. So Cam's gonna kind of shed some of the onion layers back on that and lift the hood up a bit and show us really what the other pieces are. And then we'll have a quick note on what are the most commonly asked questions that Cam is fielding right now, and a quick take on the current markets, and then we'll wrap up. So without further ado, let's start. So Cam, can you tell us what is a refi or refinancing, and how does it work? What are some of the things to consider, and what should clients know about what a refinancing is?
Yeah, so for anything realistically, when you buy a place or you buy property of any kind, unless you're buying in cash, which seems to be very rare nowadays, you're going to need a mortgage. So you're going to go to an institution known as the lenders, whether it be a bank or a credit union, whatever the case may be, and they lend you the money, and then you pay it back in installments over 25 or 30 years, depending on how long your amortization is. Now, every 5 years, that's what we call the term. So it could be 5 years, it could be 4, 3, go all the way up to 10. Now, over that term, when you're approaching, renewal for that term, where you lock it in again for another 5 for X amount of years, you have the option to renew it, or you can do refinance. You can do a switch. You can transfer that to a different institution. And essentially what a refinance is it's a restructuring of the contract. So a mortgage is essentially a contract between yourself and the lender who's lending you the money. Now with that, it stipulates that you're going to pay this much money, depending on if you have a fixed or a variable, on this timeline, whether it's 2 weeks, a week, a month, back to the lender, and then you're going to pay down your balance over time. Now, when you're looking at doing a refinance, you can do it upon renewal at the end of that term, or you can do it a little bit early. So you're essentially, you can take out more money. You can use it for things like renovations on your current property. You can consolidate some debt. You can take out extra money, pay down some credit cards or lines of credit. And then that new balance that you've taken out, that gets coupled with the principal amount that you had before. And now you've got to pay that new balance down. So it's a whole new mortgage agreement between you and the lender.
That's great. And then are there any, not surprised, but any considerations that clients should first look at before thinking about doing a refinance? What are some of those points that clients should look at before deciding?
Absolutely. You should be looking at a couple of things. So number one, I always say, look at how much your term is, like how much is left on your term, I should say. So that's pretty straightforward. You can go to your lender, you can, go to a branch if you are with a top 6 bank, and you can ask them how much is left on this current term. But even with the advent of mobile banking, now you can go onto your mobile banking app, you can check what the term is, what the balance is, the last payment you made, when the next one is due. And you can essentially get all the information from there. Number two, how much is your penalty going to be? So if you're in a fixed mortgage, for example, there will be a penalty attached to it if you break it early, because essentially what we're doing here with the refinance is we're breaking the current contract between you and the bank. You're either restructuring it or you're switching it to a different institution. And when you do that, there becomes a penalty associated with that. So you should check what term is left on it, what the penalty is going to be. And then you should also be looking at your current situation. So if you're looking at, okay, we have this house right now, but we're going to be potentially having a child, or maybe we just need a little more space. Maybe we just want to freshen things up a bit. Maybe we want to pay off some credit card debt. These are all questions you should be asking yourself on if this would make sense for you. And then if it does, then you can start that process of going through the refinance and getting the additional funds so you can go and pursue that new venture in your life. So there's a whole myriad of questions that a lot of people really ask about it, but namely, those are the bigger ones for renovations on a current property. If you're looking to buy a whole new property to begin with, whether it's like a rental or a second home. If you're looking to consolidate debt, I know a lot of people just in the last couple of years, especially now with RRSP season and then tax time, you want to clean up your debt a little bit. You might want to look at paying off some credit cards so you can use the additional funds to do that. But everyone's got a different situation for why they like doing a refinance.
Perfect. So I think that gives everybody a big overview of what the different levers are. And before making a decision on that, definitely want to check what the penalties are, what the term is remaining, and then a good time to connect. If you have an advisor, or if you want to connect and review it, that's a great time to do that, as well as work with your lender on that. So perfect, great stuff, and shedding light on what the refi is and how it works. Okay, let's go to number two, the age-old question. Clients often ask, should you be going fixed? Should you be going variable? What's your current take on that? And how can you, maybe if you can shed to light a few questions that would help clients decide if they should be going fixed or if they should be going variable. What's your take on that, Cam?
For sure. I think age-old question is probably, I think it's the most fitting way you could really put this, because everybody has a different take on this. But the main questions that I ask my clients when we're deciding whether to go fixed or variable, it comes down to two basic ones. So what's your risk tolerance? And then are you okay if your payment changes a little bit? So, and actually, you know what? I'll throw a third one in there too. What kind of cash flow situation do you want to have every month? So I'll start with the first one as far as risk tolerance goes. So if you're the type of person that likes knowing that every month this payment is going to be taken out of your account and it's going to be applied to this mortgage amount, then I definitely say go with a fixed. You know what it is, you know what your rate is, you know what the payment's going to be, and you can budget and plan accordingly based on whatever your pay periods are going to be for your employment. On the contrary to that, if you're okay accepting a bit of risk, if you do have a bit of a wiggle room with, what you're going to be earning every month, and then you might have a surplus of cash flow at the end of every month, maybe it would make sense to go with a variable. Main reason, the rates are lower. So your rate's going to be lower than a fixed, and you can pay off more. You can add maybe a lump sum payment. You can accelerate your payments. There's a lot of different tactics that people use when looking to pay down their mortgage. As far as their cash flow goes, I just kind of alluded to it. With a lower rate on a variable, you could be looking at saving, maybe $200, $300, $400 a month, depending on how big your loan is. So for example, if you have a 5-year fixed mortgage for $500,000, 25-year amortization, if that rate is, right now we could probably pull one out of the air, 3.24, for example. That's generally the baseline of what most top six bank lenders are offering on a 5-year fixed. You'd be looking at about $2,400 roughly. That's a monthly payment. But on the contrary to that, if you're looking at a 5-year variable on a $500,000 mortgage, 25-year amortization, that rate might be looking at 1.8 now. So you're looking at about a $400 savings every single month. So if you have the ability to take on a little bit of risk and then potentially pay more over time, depending on what the rate might go to, then I would definitely say go with a variable.
That makes sense. Now, what about with the recent announcement that rates are going up? How does that get baked into the variable rate? And can you explain a bit how that dynamic works?
For sure. So with the Bank of Canada overnight rate, with now that's gone from 0.25 to 0.5. For fixed mortgages, it wouldn't impact it at all. But for a variable, now we're looking at the differences on what your rate might be. So for example, back in February, it might have been 1.25, 1.35, depending on what lender you're looking at. Now for these, as I said previously, now your rate might be looking at 1.80. Now, It's a very common misconception. Media, you see this in media, and it's kind of sticker shock thinking, oh my gosh, I'm going to be paying so much more money and my payments are going to double. It's not that drastic, I think. Depending on your situation financially, it could be detrimental, but it also might not be at the same time. Depending on your loan amount, your payment might only go up about $100 a month, which would be $1,200 over a year. But if you are completely, stretched on your budget, you don't have that much cash flow at the end of every month, this would impact you pretty severely. And then you might be looking at maybe switching into a fixed if you can afford that. Now, on the flip side of things, if you do have a lot of cash flow and this payment might be going up $100 a month, $200 a month, you really wouldn't see too much of an issue with your monthly cash flow. So it's all circumstantial depending on what your situation is right now financially.
That makes a lot of sense. Now, you mentioned one thing, I mean, switching from fixed to variable and vice versa. And we looked at the costs associated with breaking a fixed rate mortgage in the previous question. What about moving from a variable to fixed? Can you talk a little bit about that if that's something that clients wanted to look at?
Yeah, no, absolutely. It's been a big question that a lot of people have been asking over the last 2 years. If you're in a variable right now, and again, like for risk tolerance, if you're looking at it thinking, I don't know if I want to be associated with paying more potentially or having more of my payment geared towards the interest rather than the principal, you might be looking at making that conversion. Yeah. So for that, it's pretty simple. All you need to do, you just need to go to your lender and let them know. So most lenders will offer the option of, if you're in a variable, they would offer you a switch to the fixed. And depending on how much is left on your current term right now, so let's say you're in a 5-year variable, and let's say you've had it for 3 years and 6 months. Now, the closest term to that would be a 2-year. It's kind of, you really have to talk to your bank about it. It kind of differs depending on how many months are left in that cycle. So if you're between the 2-year and 3-year, if you're 5 and lower, then they would go to the 3-year fixed. And then if you're 6 or higher, then they would go down to a 2-year fixed. So it really depends on what the remainder on your term looks like. But most lenders typically offer you the ability to switch from, or to lock in, I guess I should say, from a variable to a fixed mortgage.
And is there a penalty associated with that, or any fees other than the new rate that will now take effect?
It depends on the lender. So most will let you essentially just switch it. And then because at that point you're paying a lower interest rate and then you're flipping it into a higher one now. So you're actually, the bank might make a little bit more off of that in interest payments, but for some alternative lenders that might change. So it really depends on what lender you're working with at that time.
Perfect. That's great. Thanks for outlining a few of those considerations there, because a lot of moving pieces, but really the big one is, what are you comfortable with? Start with that and then look at the options.
Yeah, there's no clear-cut answers at all with any of this stuff. It really depends on your situation right now and then what you're comfortable doing at the same time.
Right. Perfect. So let's move on to question 3. And we've looked at a few instances where it might make sense to review your mortgage, but what are some scenarios that you're hearing from clients in terms of when's a good time to review your mortgage? I mean, in light of where interest rates are going, any advice you have on that front in terms of what scenarios would be helpful for a review? When is it time for a review?
100%. I think, I really tell this to all my clients that are at least inquiring about it. I think everybody should look at it. And that's not to say that you need to make this change, but I think, it is your finances and it is your life. And, with a house, it's probably the biggest investment you'll ever make in your life. So if you can find ways to make a bit of savings off of it by potentially looking at a refinance or potentially locking in at a different rate, I think you owe it to yourself to look at it. So I always instruct my clients, if they are looking at doing this, number one, why are you looking to do it? And it kind of comes down to those 3 that I outlined earlier, with maybe they're looking at making some renovations in their house because maybe they're planning on selling it in a year, or maybe they're looking at consolidating some debt. So they just want to pay off some of their credit cards and then free up a bit of space for them every month. Or maybe they just want to use it to buy an investment property. So why are you really doing it? Number one. Number 2, is it more of a want or is it more of a need? So if you want to do it because you want to do one of those 3 things or 4 things I stipulated before, then that's totally viable. But if it's something that you need to do because your cash flow situation right now might have been impacted, maybe you have lost your job and maybe you've now earned a new employment status, or maybe you're now earning a little bit more money. Or less money by that notion. If you're earning less, now you might be pushed up against the budget. You might not have that much cash flow. So it might make more sense for you to explore that option now, so you can give yourself a little bit of wiggle room every month. So it's all circumstantial, absolutely. But I think everybody should at least look at it and ask the questions, because, it is your money, it is your home, and it is your future as well. If you're going to be looking at staying in this place for the next 15, 20, 25 years, if that is going to carry you to retirement, I think you owe it to yourself to look at it, because every dollar counts.
No, that's great advice on that front. So if any clients are looking to review, what would the action steps be for them? Anything that they have to prepare, or what would you advise somebody that's looking to review their mortgage?
Anybody that's looking to do anything lending wise, I think you need to get your documents right. So know what your bank or mortgage broker or mortgage representative or specialist is going to be asking for. So anything income related, depending on what type of income you have, whether you're hourly employee or if you're full-time salary, meaning nothing changes year over year, this is the amount you're getting every year. If you're self-employed, if you are looking at refinancing, some lenders will be asking for a home insurance statement, so you're going to need that. So I'd say get your documents in order. Or if you're looking at maybe, if you're going to be consolidating some debt, I would put into a spreadsheet, or if you're working with a bank, then you can easily get a sheet prepared for you just based on what credit you have out right now, like how much debt you owe. And you can outline what cards they are, what lines of credit it might be, what auto loan it might be, and they can easily just put it into a table for you, print it out, and you can bring that to whoever you're looking at doing a refinance with. So I'd say number one, have your documents ready. Number two, have a clear understanding of what you're going to be doing with this money, because in an age now where a lot of money is getting lent out by the banks, although they've tightened the screws a bit and made it a little bit tougher to actually go and borrow money for higher rates now, they're going to be asking the questions. So they're going to be asking, what are you going to do with this extra $100,000? Are you going to be using it for something you shouldn't be? Are you going to be using it to simply do renovations? Are you going to have any left over? So have your story ready about why you're using this money. And then number two, I would get in touch with mortgage broker or mortgage specialist, whoever you can get in touch with, just to understand how the process works. I think you're saving yourself a world of headaches. We're here to help, and we're here to make the process easier for everybody. So you can, I know everyone's got a million things going on in their life right now, whether it's kids, work, extracurriculars, after hours. Let us do the work. We can do it for you. We can make your life easier for it. So I'd say speak to your mortgage specialist or your mortgage agent, and they can definitely handle things and explain things a little bit better for you.
That's great advice. I mean, number one, start, if you're working with a spouse, make sure you guys are on the same page, list what you want, and then bring the experts in. I mean, I think that's a great piece of advice. Always better to bring some experts in that can help you along the way, and to make sure that you're actually getting what you're intending on. So great tips on that front, Cam.
And one thing I'll add too, as far as documents, it's kind of a term thrown around. I know other mortgage agents or brokers will understand this, but docs up front is kind of the phrase that gets thrown around a lot, simply because giving advice without seeing anything on paper, without seeing any documentation, ethically, I really don't like doing it, because I can't see, somebody might say they earn $60,000, but it might be 58,500. It might not quite be that 60,000, and that might not be detrimental, but for some people it is. So, they're going to be asking for them. So I'd say getting organized, I think you're saving yourself a world of pain down the line. So definitely get the documents ready. And some of them take a little bit of time to acquire too. So always best to plan ahead.
That's a great call. Perfect. Moving on to number 4. So we talked a little bit about this, but let's jump back into, so say you've done some research and now you're deciding, oh, you know what, there's a good opportunity to break that mortgage. And we talked a little bit about it, but maybe we can summarize again. So what are some of the costs and considerations in breaking your mortgage? So I think this goes back to understanding the mortgage, and say you've jumped into a 5-year fixed, your first place. Now you're looking, okay, we're in maybe a better cash flow position. What are some of those costs and considerations that'll come up for clients that might be considering that, Ken?
Yeah, so you're going to be looking, number one, just on the penalty to break it. So any bank can determine this for you if you go to them, or lender for that fact. I shouldn't even just say bank, but you can essentially email or call or go into a branch and get that information from them. Suppose you have 3 years left on your term for that mortgage. You can go to them and say, okay, if we broke this today, how much would the payment be? If we waited 1 year and now we only have 2 years left, how much would it be then? And it really depends on the loan amount, the term that's left, and they'll give you a much better representation of it rather than you just estimating. But it can definitely range from, $5,000 to $10,000. It might even go all the way up to 30,000 or 40,000, depending on how much loan you have out from that lender. So it's always best to go and get that information from the professionals first, rather than getting a not very nice surprise on closing day when you have to break that. Once that first financial consideration is taken into account, what just breaking the mortgage itself, so it would just be a penalty based on the amount that you owe, how much term is left on it. The second cost you're going to want to look at is your appraisal cost. So on most files, depending on what lender you're using or what the current situation is with your property that you're going to be looking at refinancing, sometimes they'll do what's called an AVM, which is a very quick process. It's done virtually over the computer. You can just take a look at the property and then you can get a valuation just based on a couple of factors. But for argument's sake here, let's just say it's a full appraisal that needs to be ordered. So an appraisal company like RPS, they might go out and they might, it would get ordered by the underwriter who's doing the actual application for the refinance. They're going to order it. It's going to go to the house. They're going to take an inspection of it. And they're going to check out essentially just a couple of things about the house. Like, is it truly worth this value? Is it kind of broken down? Is it going to be hard to sell if you come into solvency issues and then they have to power sale and then sell your home on behalf of you to recoup their money that they lent? So a couple of factors like that, but the appraisal cost will generally run you about $400, $500. And then the last one you're going to want to look at, if it's a situation where you might not have great credit, you might not be looking at using a top 6 bank. You might be looking at using an alternative lender. So if you're going to be looking at that or B lending, then some brokers will, they might charge a fee. Is that going to be $200, $300? It really depends. It depends on the broker too. Sometimes the fees are a little bit higher. I wouldn't call them a necessity fee, but it's definitely a fee that you should be looking at. And then you should always be asking as well. I get that question, at the tail end of every consultation I have with a client of how much is your fee? So depending on what lender you're going to be submitting to, there might be a fee attached to it. So those are the big 3 that I think you should be looking at before you consider breaking your current mortgage.
That's great. And then to sum it all back, so if you're clients that are looking at this, for one, be clear on what your goals are. I think number 2, as Cam was mentioning prior, get your ducks in order, get your documentation before, what was the term that you coined it?
Oh, I call it docs up front. So yeah,
Make sure you got your docs up.
Get those in order. And when you actually submit them, the underwriter will take a look at them. And then just based on that, if it's going to be a file that is going to be going through and you are going to be looking at getting this approval, they will order an appraisal. And sometimes it's just done over the computer, which is very hands-off for everybody. But sometimes they'll order a full appraisal, which then somebody will be coming to the property and then they'll be looking at actually doing a full valuation of what the property looks like.
Perfect. And then once you do that, also make sure you ask your lender or your broker what the fees are. So that way you get a full picture and then you can decide on how you want to proceed. So nice way to sum up kind of the whole transaction when you're looking to either break or change your mortgage. So really good insights on that, Cam. Okay, so that brings us to number 5. So in this segment, Cam, I wanted to ask you, what are some of the common questions that you're getting right now? And I know the current state of the market that there's in the GTA, at least it's a frenzy, especially if you're on the buying side of things. If you're on the selling side of it, you're quite happy, but wanted to get your take on what you're hearing from clients. What are some of the commonly asked questions that you're facing? And then just some thoughts on where the market is and any tips for either new buyers or individuals that are considering their mortgage options.
Absolutely. Well, number 1, what are the rates at right now? So I know rate is always something that a lot of people tend to focus on quite a bit, but it's really not that simple. A nice low rate might look very attractive, but when you kind of look under the hood, as you put it before, you might figure out that there might be no prepayment privileges. There might be, different penalty structures for breaking it. As far as lump sum payments and accelerating payments, they might not have these options afforded to you. And one thing I like doing too, which is why I like working with you, if I have any clients that come to me, we can get the financing aspect of their situation figured out. I always like introducing them to my team. So I'll have a team of a financial advisor, a financial planner. If they're in need of getting a realtor lined up, if they've just given them a pre-approval, I like having somebody that I can turn to. So you're getting a lot of different services at your disposal, totally free of charge. So if you get your transaction figured out, okay, great. Now we need to have a plan in place for figuring out how we're going to recoup this down payment, which in turn would be somebody like a financial planner or a financial advisor. So that one right now is what are the rates at? I like, I'll give them 3 or 4 options and then just explain why I think each one would be, suitable for them. And then I'd give my own professional opinion on what I think they need. So what are the rates right now? What can I afford? It's the age-old question. Now that we've got a higher qualifying rate, it's made it a little bit trickier for some people to afford more. And now that the overnight rate has increased again, it's just making things a little bit more expensive to actually borrow money from your lenders. But I think figuring that out and then at least just taking 10 to 15 minutes with a broker or mortgage specialist to figure out what your credit situation is, what your income is, what your down payment is, and then they can give you a realistic expectation of what you can afford in the market right now. Again, perfect segue, current market conditions. What are you seeing right now for buyers? Now, a lot of the realtors I work with, everybody has a lot of buyers because everybody wants to get into the housing market right now. It's hot. Everybody wants to get their piece. It's not always the best situation or the best time for that person to be getting into the market. So, for example, I had a client a couple months ago who was looking at doing something at buying their first property, and in the current market in rural Ottawa, it might be a lot different than what it would be in downtown Ottawa, or vice versa. Even in Toronto, if you're looking in some place like East Gwillimbury, it might be just might not be a huge difference, but it might be the difference of about $100,000 to $200,000, which could be the difference between you getting into a house and not. So just current market conditions, understanding where the house is that you're going to be looking at purchasing. How much can you expect to pay extra? We're getting into this crazy time of bidding wars right now. So how much are you going to be looking at paying overall? Is the market going to be cooler in certain areas than not? And then if you've got credit situations right now, which is where I was going with that before, their credit situation wasn't that great. We needed to take some time to pay off some debts, get them off the credit file, build up their credit rating overall, and then being a little more advantageous for them to be a little more presentable to a top 6 lender.
Right.
Just finding out what the current market landscape is all over Ontario. And then from there, I think the last question too is, how long is this going to take? So with the amount of volume coming in right now, a lot of banks, the last 2, I'd say, I wouldn't go as far as saying 2 years, but I definitely think over the last year, it's taken the banks a lot longer to get through some of these applications just purely based on volume. It's not the broker's fault. It's not the realtor's fault. It's not the client's fault. It's just the amount of volume coming into these underwriters. And there's only so many hours in the day that they work to get through all of these. So if you are looking at doing something, I don't recommend doing it on a 2-week or 3-week notice. I think you should give yourself a little more time. It's going to save you headaches. It's going to save your broker headaches. It's going to save your realtor headaches. Everybody is going to be a lot happier if you give yourself the time to plan accordingly for these things. So I'd say safely plan about a month out to 2 months out, give everybody a little more time. And not only is it done on the underwriting side, but on the appraisal side. If everyone's submitting applications, that's a lot of appraisals that they're going to have to order. So it might not get done for a week, might not get done for 2. So give yourself some advance, give yourself a little more time to work with. And I think everybody will be better off for it.
I think that's a great piece of advice. I mean, number one, know what you want, and then go work, start working with the team. Reach out to Cam, reach out to your lender, and start to get the documents. Given the current state, as Cam was saying, 1 to 2 months of work to get these deals done. So make sure you know that, and you're not expecting if you call your broker the next day that you'll get a quick turnaround. I mean, I'm sure some magic can be done, but as a matter of practice, I think getting your docs up front, getting everything in order, and then working with the team is a great way to approach it. If you're looking to refi, if you're looking to move from fixed to variable, variable to fixed, or you're looking to enter into your first mortgage, or you're looking at your options for a renewal. So very much appreciate it.
And I think too, sorry to cut you off.
I
was just going to say some lenders can get you an answer that same day.
Right.
If you submit something at 9 a.m. in the morning, they could have it back to you by 2 or 3 p.m. But you can't bank on that to get something done if you're looking at doing this transaction the next day or a week from now. So It's always best if you have the ability to give yourself a little bit of a runway to work with, and then work with your broker. They'll always be in contact with you about what's happening, but some lenders are quicker than others. But I don't think it's to fault anybody on that front. I think every bank has different processes. Every lender has different processes. So take the time, give yourself a little bit of a runway. And I don't think you'll look back on that. I think that you're doing yourself a big favor by doing so.
Great advice. Great little tidbit. So I want to thank Cam, first and foremost, for taking the time on sharing the insights and the knowledge. We're going to be sharing this on LinkedIn and YouTube. And if you do have any questions or follow-ups or something that maybe Cam has said that sparked your interest or you want to reach out, please feel free to do so. We have our contact info there. Cam's will be there and it'll also be posted in the comments. But I really encourage you, if you're thinking about this, if you have questions, great time to reach out and get an expert on your side. Because they're the ones that have gone through this. I mean, Cam works with clients on a day-to-day basis and he's seen these scenarios and he can certainly help in that regard. So we hope this was insightful. I mean, these are some of the questions that we're both fielding. And if there are more that are coming your way, please do share it. We might do a part 2. So just want to say a big thank you to Cam for sharing the insights and the intel today.
Thank you so much. Always a pleasure, Erik.